Well,
All right. Hello, everybody.
Hi, well,
So-
welcome. Well, welcome everybody to the Ad Hoc Audit Committee for fiscal year 2024. And I don't know, we could go around and introduce ourselves and then we'll let the auditor start the presentation. Jared, would you like to?
Sure. I'm Jared Schmidt. I'm the CFO for the city of Norwalk.
I'm Chitsime Lamb. I'm the comptroller for the city of Norwalk.
Karen by Kelly, Deputy Controller for the City of Norwalk.
All right, I'm Nate Jordan. I'm the not connected to the city of Norwalk outside person. Audit committee.
Greg Burnett, City Council Member and Chair of the Finance and Claims Committee.
Carrie McCready Pritchard, Board of Education, and I'm also the co-chair.
Munda Asmani, Chief Financial Officer for Norwalk Public Schools.
And I'm Jim Freyer, member of the Common Council and also on the Finance Committee.
Yeah.
And lastly, I'm Johan Lopez. I can't turn on my camera, unfortunately, but I'm a member of the Common Council, member of the Finance Committee.
Hey, thank you, everybody. David, would you like to introduce your team from CLA?
Yeah, good afternoon, everyone. My name is David Flint. I'm the principal with CLA, and with me today is Gabriel Epstein. He is the a director with CLA and the director on the City of Norwalk audit as well.
Good afternoon, everyone.
Thank you. David, would you like to start the presentation?
Yeah, absolutely. Are you going to share it or do you want me to?
I believe you have access to share. Let me know if you can't.
I'll try.
Okay.
Um,
I think this participant can share.
Okay.
Just wanted it. Okay, perfect.
let me know if you guys can see that.
Mhm.
Yeah?
It's all good.
Yes.
Awesome. All right, let's get going. All right. Our legal disclaimer that I'm required to put in here. All right, I'm going to start off with an agenda. I'm going to go through the terms of our engagement, basically what you hired us to do.
Sorry, Dave, can you do the slide view? The slideshow view?
I definitely can, Linda. Let's see.
Thank you.
Slideshow from the, I don't know what that is, from the beginning. Yeah, see, this is what I was afraid of. It goes on another screen, Linda. That's the problem. Hold on. Let's try. I've had the same problem before. All right, that should do it, I think.
You have to start reshare again.
I thought I did. Not working, huh?
No.
Yeah. Okay, there we go.
There it is. Looks good.
All right.
And one more thing, David, do you want us to hold our questions to the end or?
Well, if you have something that's in your mind, feel free to stop us. I don't care, or we can wait to the end. Whatever you guys want.
Great.
No issue here. All right, so agenda. So I'm gonna go through the terms of our engagement. Like I said, what you guys hired us to do. I'm gonna do an executive summary, basically the results of the audit, high level, and then I'm gonna go through some high level financial highlights. And then Gabe's gonna go through the results of the federal and state single audit, and also go through the management letter that we provided to the city. So what you hired us to do, first and foremost, express opinions on whether the basic financial statements are presented in accordance with GAAP. That's obviously the opinion that's within your ACFR, your annual comprehensive financial report. That is the primary thing that we do. We also express an in relation to opinion on the schedule of expenditures of federal awards and the schedule of expenditures of state financial assistance. This is, of course, your federal and state single audit. We can express an opinion on compliance related to major federal and state award programs, making sure that you comply with all the rules and regulations of each of those grants within your single audits. We provide a report on internal control over financial reporting and compliance with laws, regulation, contracts, and grants. This is more commonly referred to as your yellow book letter. And this letter is the second opinion that's included in your state and federal single audit reports. And then finally, we provide a report on internal control over financial reporting, control over compliance related to major federal and state award programs. A lot of opinions here, but I'll talk about each of them. So if I move ahead, so here are the results. So financial statements, unmodified opinion on the financial statements. Crazy name, I know, but unmodified opinion is the best opinion that can be received. And we had no findings reported on internal control over compliance as well. For the federal single audit, again, unmodified opinion on the major federal programs. We did identify 3 what we call findings this year. The first was a significant deficiency in internal control over financial reporting. And then we also had 2 significant deficiencies in internal control over compliance. And Gabe will talk about each one of those specifically later in the presentation. Same thing with the state single audit, unmodified opinion on the major state programs. But we did identify a significant deficiency in internal control. That's the same one. That significant deficiency in internal control or financial reporting is reported in both. It's not 2 separate instances. And then we did have 1 significant deficiency in internal control over compliance. Again, Gabe will go over those in detail. So I'm going to talk about some financial highlights. So first off, we have our government-wide financial statements. This is kind of a snapshot of Exhibit 1 from your financial statements, and these are performed on the full accrual basis of accounting. And what does that mean? That means that these financial statements include your capital assets and your long-term debt. You'll see here that the city has capital assets of $875 million. In long-term debt of $564.8 million. If you look in your ACFRs, you could see, and when I say ACFR, sorry, your city financial statement, you'll see the detail of what the capital assets are on page 46. You'll see the detail of the city's long-term debt on page 49. That all comes down to your total net position. You'll see total net position for the year of $507.5 million. The majority of that, $524 million, is your net investment in capital assets. Now, what that is basically all of your capital assets less any debt that is outstanding used to acquire those capital assets. So it's basically a good measure of how leveraged your capital assets are. So you see of the total $875 million in capital assets, you have $524 million after that debt is subtracted from that amount. You have $42.8 million in restricted, and then everything that's left over is classified as unrestricted, and that's a negative $59.7 million. So moving on, these are your fund financial statements.
Can you go back to that for a second?
Absolutely.
So if I look at that, that says from an operating standpoint, we're underwater, which I never noticed that before. So I'm just curious what that means. If you
Yeah,
can
so
touch on
like
that.
I said, this is the full accrual basis of accounting, and a lot of time there's not a lot of people don't really look into the statement in too much detail because what it includes is the city's long-term debt, but specifically your pension and OPEB liabilities, which are significant numbers.
Right. All right. I'm just thinking that's got the OPEB liability in there.
Correct. So you
Okay.
throw those pension. Well, for you guys, it's pension. Your OPEB is actually very well funded. You throw those pension liabilities in there, and this goes for any town. You throw those pension liabilities on this balance sheet, and it's going to look like you're underwater.
Yeah.
Okay.
All right. Yeah, I get it.
Okay. So this is kind of what everybody looks at to analyze how they're doing, right? These are your fund financial statements. They're the modified accrual basis of accounting. There's no capital assets and there's no long-term debt. And you look at right here, you see your general fund has a total fund balance of $97.8 million. Going across the board, you have your capital project funds, $48.5 million. your ARPA fund, $1.2 million, and you were able to accumulate that fund balance in your ARPA fund through the investment returns that you received from that money, which is great. You put that money to use, which is a lot of towns did not. You have your Board of Education Grants Fund. It's in a deficit of $1.1 million, and we see small fluctuations in this based on the timing of grant payments and stuff like that. So nothing to be alarmed there. And then you have your non-major governmental funds, which is basically all the other smaller funds combined together, and they have total fund balances of $31.9 million, which is great. So just some financial highlights. What's everyone mostly concerned with? Obviously, the general fund. The general fund had a fund balance of $97.8 million. Of that, $11.8 million is assigned. $3.8 million of that is 2024 encumbrances that are being rolled into 2025. And then there's also $8 million that was set aside for the 2025 budget. So that makes up that assigned balance. And then the rest is $86 million of unassigned fund balance. And that represents about 20.1% of the 2024 general fund budget, which is absolutely fantastic. One of the highest I've seen. Moving along, financial highlights for your proprietary funds, more commonly referred to as your enterprise funds, basically your funds that are a self-sustained business. You have your water pollution control and you have your parking authority. Both had great years. You'll see water pollution control had a change in net position, but more commonly referred to as net income of a little over $1 million. And the same goes for the parking authority. You see very strong net positions for both, $115.7 million of net position in the Water Pollution Control Fund and $21.7 million for the Parking Authority. Also included on this slide all the way to the right is your internal service fund, basically your insurance fund, right? Your insurance fund took a hit this year. It had a deficit of $4.9 million, but still does have positive fund balance at the end of the year of $6.5 million. Pension and OPEB funds. Really good years for pension and OPEB trust funds across the board, really. And you'll see here, that's no different for the city of Norwalk. Your pension trust funds combined had a change in net position or net income of $34.9 million. And the OPEB trust fund, $11.8 million. And basically, where does that come from? Fantastic market results for fiscal year 24. And I'll cover that a little bit more right now. Some more financial highlights. Property tax collections, 99.8% compared to 98.4% in the prior year. Net pension liabilities. We talked about those liabilities going on the books for Exhibit 1. You see how large these numbers are. The employees plan had a $58.9 million net pension liability and is 79.5% funded. This is a better funding ratio from last year, so we are seeing increases there. That was driven by those investment returns. The fire plan had a $39.2 million pension liability, 76.3% funded. Again, better funding ratio than last year. Police plan, $53.9 million, 73.9% funded. Again, better funding ratio than last year. And then finally, the small food service plan, $1.6 million net pension liability, 71.5% funded. Again, that plan had a better funding ratio year over year. If you look in your financial statements, there's a schedule called RSI 4. It'll show you that the city made 100% of the required contributions. So you guys hire actuaries every year to tell you how much you need to put into these plans. The city made 100% of those contributions into those plans, which is great. And then for the pension plans, they averaged about 11.4% return on investment for fiscal year 24, which is fantastic. The next slide is your the OPEB plan specifically. You'll see that on RSI 7, the city plan actually had a $23.5 million net OPEB asset, which is awesome. The plan is 120% funded. Most of the cities, particularly in Connecticut, the larger cities, they abandoned trust funds as far as OPEB goes when times were tough, and they took that money out and they're paying as you go. To have a fully funded OPEB plan is absolutely fantastic. Again, RSI 8 will show you that you made 100% of your actuary contribution into the OPEB plan. And the OPEB plan actually received a 14.2% investment return for fiscal year 24.
Does that OPEB surplus, does that have anything to do with change in the discount rate, or did we change the discount rate, or we kept it the same, or what did we do? Because I know, like, if with a real low discount rate or something, then the liability goes up and the interest rates are high, so theoretically it would reduce the liability.
Correct. We definitely did not increase it, which would be the beneficial. I know we've been working to decrease the discount rates over the past few years.
Yeah, last year should have been the last year of the decreases. So I believe last year we got to 6.5%.
Yeah.
And that was the goal. That was the target.
Yeah, so what we saw across the state is over the last 5 years is kind of a trend to push those rates that were in the 7s down to exactly that, around the 6.5%. They're doing like 1/10 of a percentage at a time. So we definitely were not seeing any increases in discount rates.
No.
Let's see. But yeah, I believe we're at around 6.5% if I get.
It's definitely at 6.5 now, and I think we got there. Last year was the first year that we
Okay.
got there.
Great. Yeah, so it's definitely not a result of increasing that rate. That's for sure. All right, so I'm going to turn it over to Gabe. He's going to talk about the federal and state single audit.
Thanks, Dave, and thank you to the city and to the audit committee for having us today. I'm Gabriel Epstein. I'm a director at CLA. I work in the assurance practice. I serve exclusively governmental clients, and I'm out of the West Hartford office. I'm going to talk a little bit today about the federal single audit. First item here, first bullet on the list, your total federal awards expended, $39.7 million for this year. This is actually a fairly significant reduction from the prior year. Prior year totaled $52.2 million. What is the driver for that decrease? The primary driver is the Education Stabilization Fund. This is your ESSER grants. Basically, the remainder of the second tranche of that grant and the majority of the third tranche of that grant were spent down in prior year. If you look at the prior year schedule of expenditures, you'll see $18 million in total for the ESSER grant versus $4 million this year for the ESSER grant. So that's the primary driver of the decrease in federal expenditures year over year. The expectation is that this trend will probably continue as COVID grants are spent down, along with potential changes in the federal funding situation related to this new administration. But definitely something that we're seeing across the board as these COVID grants are spent down. Your major programs for this year. These are programs that we tested for the single audit. Usually they're programs that exceed a certain dollar value. In this case, this year it was 1.2 million, and were not tested in the previous 2 years. There are also some instances where we have grants that have high risk factors that might necessitate testing a grant that we have tested in the last 2 years. The 2 grants that we did test are perfect examples of both of those situations. First one is coronavirus state and local fiscal recovery funds. This is what is more commonly referred to as the American Rescue Plan. If you look in the schedule of expenditures of federal awards, you will see a COVID-19 identifier before the name of this grant. That basically indicates that this is COVID-related funding. We have tested the ARPA grant in the past 2 years, but this is a situation where the federal government considers this a high-risk grant, and so we're required to test it again. Second grant that we tested this year is the Child Nutrition Cluster, and this is an example of a rotational grant. The last time we tested this is in 2021, so 2022, 2023. Now it's fiscal year 2024, and we have to test the grant again. And this is like the National School Lunch Program, School Breakfast Program, free and reduced meals for students. So feeding the kids, it doesn't get better than that. You guys will see in your federal single audit report there's an area where you guys are designated as a low-risk auditee. And basically what this means is for the last 2 years, you guys issued your reports timely and there were no material weaknesses. So that is a good thing. You guys did receive unmodified opinions, as Dave mentioned, on both aspects of the single audit, internal control over financial reporting, and compliance with the federal programs. We did not note any material weaknesses, but we do have 3 significant deficiencies. These are less severe than a material weakness, but important enough to merit the attention of governance. The first item that we have is journal entry segregation of duties. We do take this finding pretty seriously. Basically, the gist of it is that the city's financial system, Munis, is set up in a manner where it allows entries, journal entries, to be both prepared and posted by the same person. This is not something we usually like to see. Typically, we need a separate person preparing the entry and a separate person reviewing and posting the entry. What could be the impact of this? Without segregation of duties, it's possible that there could be fraudulent journal entries made by management without a robust approval process. We did do some extended testing of journal entries of this type. We took a sample of all the entries where this deficiency applied. We tested, basically make sure that these entries had the proper support. They were recorded correctly in the proper period with the proper accounts. And we didn't find anything through that testing that was indicative of anything fraudulent. So along with other controls that the city does have in place, like budget to actual review, cash reconciliations, and expenditure controls, we did not consider this a material weakness. We considered it a significant deficiency, still important enough to merit your attention.
David, quick question and comment. In this particular deficiency, what is the recommendation to resolve it? And is there a specific timeline where we, being the city, need to put that action plan in place?
Yep, so I can answer that, Dave. As far as a recommendation, Greg, firstly, just revisiting the journal entry process, making sure that there is a formalized process where we have a separate preparer and reviewer. We've also recommended, and you'll see it when I go over the management letter, we're recommending that IT configure the accounting software, Munis, so that it simply doesn't allow entries like this to be posted. It simply won't allow the same user to both prepare and post the same entry. That would be our preferred route to go. But number one is just revisiting the process and making sure that there's a process in place for each of these entries. As far as timeline to implement, our preferred timeline would be prior to the end of this current fiscal year, so June 30th, 2025.
And Greg, if I can follow up, the practice doesn't happen anymore. We're not doing that anymore. We don't have the same person preparing and posting. So that's been stopped.
And it's my understanding, Jared, right, that was stopped immediately upon us finding it.
Correct.
Right.
Yep.
Great. Thank you for that update. And I'm glad we cleared it up. Great.
Thanks, Greg. And thank you, Jared. As far as the other 2 significant deficiencies we noted for the federal single audit, first one is just in relation to the city's procurement policy. There are a lot of necessary elements and language that need to go into that policy as prescribed by the federal government. The city has implemented a new procurement policy, so there is a new policy in place that does comply with all federal guidance. But that policy was not put in place until late in fiscal year 2024. So the finding remained on the single audit for this year. However, it's another situation where it's been remediated at this point, and it will not be a finding for the fiscal year 25 audit. The second deficiency we noted is also in relation to procurement. This is for the Child Nutrition Cluster Grant. And we did test one procurement in relation to that grant for a contract totaling about $40,000. Basically, federal guidance requires that the city solicit quotations for contracts over $10,000 and solicit bids for contracts over $250,000. So in this situation, the city should have solicited quotations for this specific contract. I think what happened in this situation is this is a vendor where at one point the scope of their services was under that micro purchase threshold. And I think over the years, the scope of services has changed. Other factors have changed and just costs in general have increased. And now it's gotten to a point where, you know, this arrangement with this vendor is over that $10,000 threshold. And so should have gone through the competitive quotations or sealed bidding process. This is immaterial non-compliance. That's why it's considered a significant deficiency rather than a more serious material weakness. I will just stress, you know, the importance of analyzing the existing arrangements that you guys have, your procurement process, making sure that, you know, any procurements that took place years ago are still applicable, that the scope of services hasn't drastically changed, making sure that there's not a need to revisit that procurement and solicit quotations or go through a bidding process. So I will move on now from the federal side to the state side. And you'll see this slide, guys, looks pretty similar to the federal side. Total state awards expended this year are $73.7 million. For the state, we typically look at the fluctuation in non-exempt expenditures. These are programs that we have to test if it's over a certain threshold. The exempt programs are usually formula-based items like the Mohegan and Pequot grant, or grants like school construction, where the state of Connecticut has decided that they're not subject to audit as a major program. The non-exempt expenditures also dictate the coverage amount that we need to test each year. So there's a certain dollar value of programs that we're required to test. So for this year, your non-exempt expenditures actually increased on the state side. It went from $27.5 million to about $32.5 million from prior year to current year. Unlike federal side, it's not a situation where you can just attribute this to one grant. It's spread over a number of grants. Alliance District increased a bit. Part of this is a new educator diversity portion of that grant. The grant is also formula-based, so it can fluctuate depending on the funding available. You also had a community conservation development grant. This is a new project-based grant for about $1.6 million. $2 million increase in urban acts grants, which I'll talk about as well. And about a $400K increase in LoCIP, local capital improvement program, like a project-based grant, and expenditures typically vary depending on projects that are going on and the phase of completion. For our major programs on the state side, basically the same criteria as federal. Your threshold was about $700,000 for determining these programs. So 5 of them on the state side, first 2 being Alliance District and Priority School District. These are educational grants to increase student achievement, pretty broad educational purposes. Community Conservation Development, this is from the DEEP, and it is for improvements to 10 parks within the city. The official name is Norwalk Sustainability and Beautification around Norwalk. 4th grant is the Urban Act grant. Actually, there's 2 projects that both fall within the same program. The vast majority of it is the DECD Waypoint 2 grant. And this is public infrastructure improvements around the West Avenue area. So Merwin Street, Academy Street, Orchard Street, and that surrounding area. The other minor portion of this grant is for Cranberry Park construction. And last but not least, tiered pilot. This is payment in lieu of taxes for properties within the city that are exempt from local tax. 2 significant deficiencies noted on the state side. The first one being journal entries. It's the same finding that went on the federal report, as Dave mentioned, goes on both reports. The second finding pertains to that community conservation development grant. There are 2 semi-annual project reports that are required to be submitted for this grant. The reports were completed, but they were just not filed with the DEP. So nothing major in terms of that. It is a significant deficiency. The reports were filed with DEP, following our inquiry about that.
Quick question, David. Is there any penalty associated with that late filing?
Not that I'm aware of, Greg. This is something that we see quite a bit in relation to grants like this with DEP and DECD. Just 2 reports that were required to be submitted. They've been submitted now. As far as I'm aware, there's no negative repercussions that stemmed from that.
Right, thank you.
Could I just ask a question to put this in context? How many reports did they have to submit to DEP? Is this 2 out of 100 or is this 2 out of 4?
So in terms of this grant, this is 2 out of 2 semi-annual reports. They were both prepared by the Parks and Rec Department. So when I asked about them, the reports were there. They just simply had not been sent to the DEP yet.
Was it significantly overdue?
They were significantly overdue. I can find the exact dates for you here.
But by the time we come do the audit, we're 4 months after year end anyway.
Yeah.
So
Yeah, okay.
So these reports were August 2023 and February 2024 reports. They were filed in August 2024, which is after we asked about the grant.
Okay.
So that is it for the state side of things. I guess I will just mention unmodified opinions on both aspects of the state side, financial reporting and major program compliance.
yeah, I don't want the fact that Gabe talked about findings for the last 5 to 10 minutes to overshadow the fact that we still had unmodified opinions. There were no material weaknesses identified.
So moving on here to the management letter. And basically what the management letter is best practices, opportunities for the city to strengthen their controls, the efficiency of their operations, or, minor deficiencies that we noted that don't rise to the level of a significant deficiency or material weakness. First item here is timely reporting of financial information by the departments to the comptroller's office. Basically, during journal entry testing, we saw a couple entries where revenue was being posted to a miscellaneous account, basically almost like a holding account. And the reason why finance and the comptroller's office would do this is because the departments are not giving the comptroller's office the information they need on a timely basis to record, these entries and the revenue in the proper fund, in the proper account. So what the comptroller is forced to do is record this to basically a holding account until they get that info from the departments, at which time they can book more journal entries to reclass it to the proper place. This is basically a situation where the comptroller's office is doing all they can be doing. It's up to the departments at this point to, revisit their processes for getting that information to the comptroller in a timely manner so that they can properly maintain the ledger. Second item we have is information technology controls. And basically this is the journal entry discussion we just had. Our recommendation would be that Munis, the financial software, be set up in a manner where the same user can't both post and approve a journal entry. That is just a best practice recommendation. It is not necessarily what the city has to do, as long as we're seeing a formal process where there is segregation of duties in that area. Third item I have is year-end cutoff. Basically, this pertains to one entry in the education grants fund. It's basically a repayment to the state. It was initially recorded in fiscal 25, but it should have been accrued in fiscal year 24. So an entry was recorded for the audit to properly accrue that item. Fourth item is accounting policies manual. And this is a pretty general recommendation that we give to many municipalities. And I think really the gist of this is business continuity. So, Chitsame is awesome. She's a great comptroller. She does a fantastic job. But if Chitsame gets sick tomorrow, if Chitsame is no longer able to work for the city tomorrow, it would be ideal if the next person to step into that role had something to work off of, something that shows this is what Chitsame does on a daily basis, on a weekly basis, on a monthly basis, for the year-end close, for the audit, so that the next person in that role can step into things more seamlessly. They're not trying to reverse engineer what Chitsame used to do. It's all laid out right there for them within a comprehensive manual. So just a best practice item to create a manual like that with all controls, processes, and procedures related to finance. Fraud tip line is an item we have. This is basically a recommendation, have a formal whistleblower policy or have an anonymous fraud tip line. Basically, what we don't want to happen is, okay, an employee realizes that their boss is committing fraud. We don't want them to go to their boss and say, I just realized you're committing fraud. There should be, a formal process, a formal chain that they can go through to report items like that so that they go to the proper place and can be addressed in the proper manner. One of the best ways to do this is with an anonymous tip line that employees can utilize to make their complaints or concerns known in regards to fraud. Fraud risk assessment is another general recommendation. This can be a formal or informal process. Basically, either an outside consultant or a top member of management brainstorming about what are the risks of fraud to the city, how could fraud, whether it's fraud over financial reporting, theft of assets, how could those type of situations occur, and what is our response to those risks? It's basically brainstorming what the risks of fraud are and how those risks can be addressed. And finally, I have student activity funds bank reconciliations. Generally, the student activities are not material to the financial statements in general. This is a fund and bank accounts basically related to different field trips or activities or certain functions that the students put on. Is not generally material to the financials, but this is an area that we see as particularly susceptible to fraud. Basically, it's cash at decentralized locations, and with that decentralization comes a higher risk of misappropriation of the cash. The city has put in place a number of different procedures and is in the process of bolstering their reconciliation process in regards to the student activity funds. Our recommendation is just that they, continue to do that, perform the reconciliations on a monthly basis, consider any reconciling items, and make sure that the responsibility for that process is formally designated to individuals in the finance office. So just a best practice suggestion to make sure that, the I's are dotted and the T's are crossed in regards to these student activity funds.
Can I just make a quick comment, Mr. Flint? This is for Mr. Osmani. Since assuming the role of CFO for the Board of Ed, what changes have been implemented in the accounting practices for student activity funds?
Thank you, Sherry. And that's a very good point, David, because you are right. The student activity funds are ones that are most susceptible and vulnerable. So 3 years ago, when I became the CFO of the Board of Ed, we obviously have 21 schools.
You're beeping, you're beeping, Mr. Osmani. I don't know what's going on there. I don't know if it's just me hearing it. It's like a squeaking going on.
Sorry. Can you hear me?
Your microphone sounds really
Yeah,
bad.
we can hear you, but it's just like a weird feedback or something.
Oh, okay. Let's see what we do here. Okay, I'll let Dave finish, and then I'll log in by phone. And
You're much better right now, Linda.
It's good.
Oh, I am?
Better.
Okay, thank you. Let me lean in. No, so I was saying, since coming on board, we have 21 schools, and you're right. These are fundraising accounts that are not accounted for through the regular Board of Ed budget. So when I came on board, I believe we had almost 8 different bank accounts. Basically, each school would start up a student activity account, set up a 501c3, and then they would open up their own bank account. So one of the things we did when I got on board is we consolidated all the student activity accounts with M&T Bank. So now they're all centralized with one bank, and Chitsame and her team also have access to that account. And we did start the process of monthly reconciliation. However, the wonderful individual that I had working on the Board of Ed side is now a wonderful individual working on the city side. And so we're working on finding someone else to kind of continue that reconciliation.
That's great. Thank you for that. I appreciate that.
Thank you.
Any other questions?
You might want to stop sharing because we're seeing your text messages right now.
Sorry about that, guys.
There we go. Great.
Okay.
Not so much a question, but more of a comment statement that while I understand the fraud tip line, the fraud risk assessment are somewhat standard suggestions in the management letter. I know that we have for several years had an open line item in the budget for a chief information security officer, and I think just seeing this report, we should continue to put priority in trying to get a cybersecurity officer, CISO, on board who could bring that level of expertise to ensure that we're in the best possible position to prevent any type of fraud or risk to the city's assets. So just want to make that statement that we need to keep that CISO position or make it a priority to try to fill that role, because even though we have not had any incidents, we want to ensure that we don't have any incidents.
Can I
Any
just
other
ask,
questions or comments?
can I just ask another question related to that too? Maybe to Jared. Jared, I think the suggestion was to either get a consultant or somebody within the city to brainstorm this, and I don't think we're talking about specifically IT here. I think we're talking about in general any areas of fraud. Is that the way you understand it, Jared? And let me ask, has anybody in the city thought about this, or have you thought about getting other people from another department perhaps to take a look and do that brainstorming?
Jim, are you talking about the fraud risk assessment or the
The
whistleblower?
fraud risk assessment, yes.
Yeah, we have talked about it. We would want to bring somebody in. It would be better to have someone third party unbiased come in from the outside.
Yeah.
Our issue is that, and this can apply kind of across the board to all the recommendations. It takes time. It takes time from our employees, and right now we're staffing up in the comptroller's office and a couple other offices, and so we're trying to bring everybody up to full staffing, and so we can hopefully absorb something like that and be able to work with whoever it is who comes from outside, because it's not just somebody's coming in, we ship them, we put them in a closet or in a corner somewhere, and they're out doing their thing. There's going to be significant time requirements on our staff.
Right. Along the same lines and internal controls, it doesn't sound like we have any kind of internal control weakness, and as soon as any of those weaknesses were presented, they were immediately remediated. So I feel pretty comfortable about that. But the CLA guys, is there any need for the city? I know Greg talked about a cyber officer, a cyber inspector, but is there any need for an internal auditor? Or do other municipalities our size have an internal auditor?
You guys are I think the sixth biggest municipality in the state of Connecticut. I mean, you're certainly getting up there. City of Waterbury, for example, has an internal auditor. That's a full-time position. Some of the other municipalities do as well, but most do not. A lot of them will hire a CPA firm to act as the role of internal auditor. And then so when the finance committee says, hey, we would like to take a look at the public works department, misappropriation of assets, inventory, whatever, they would reach out to that firm and say, hey, we have a special project we want you to do. Some even have multiple firms on payroll's not the right word, but they have contracts with multiple firms and say, hey, there's the project we want to do. Would you each give us proposals? And they choose the best one. So I don't know if you're necessarily at the level of a full-time internal auditor, but I definitely think there is a need there for some internal audit work, some risk assessment work, things of that nature.
Okay, good. Thank you.
So that's it for the management letter here. I'll turn it back over to Dave to wrap us up and get any additional questions. And I also just want to stress, as Dave mentioned before, these significant deficiencies in the management letter recommendations, they should not overshadow the fact that the city, received an unmodified opinion on their financial statements and unmodified opinions on both the federal and state single audit reports. So that's something that should be certainly commended and congratulated as well.
100%. Thank you, Gabe. Yeah, and the last thing I just wanted to say, I know we only talk at the conclusion of the audit every year, but we are available to you guys if you guys ever have any questions, comments, concerns, or just want to talk through something. That line of communication can certainly be open more than just this solitary meeting every year. So does anyone else have any questions or comments for us?
Just a quick comment. These audit reports typically point out where you have possible concerns or weaknesses, but I think overall, it's a good report, and I want to commend the finance department for the outstanding work that they do year in and year out. And I know other municipalities are in really bad shape, and we're very fortunate to have a strong finance team, and we're not in an area where we have major concerns. And as pointed out today, in each of the areas, we've already put action plans in place to resolve them. So again, I just want to compliment our finance team.
I would echo that, Mr. Burnett, because I know Mr. Asmani and his team work very hard and diligently in preparing our budget and making sure that things are done correctly, and we appreciate that work. So I agree with that.
Yeah, CLA will echo that as well.
Yeah, and thank you, Greg, and I'll just make sure the credit goes where it really should, and say thank you to Chitsame and to Karen. And I know Agnes gets involved, and Tom and everybody else in the finance team and in the comptroller's office. So I appreciate it. This is probably uncountable number of hours that they spend getting the documents together, getting the data together. And so thank you guys for that.
Well, thank you so much for the time, everyone. Again, feel free to reach out if you have any more questions.
All right, well, thank you everybody for attending this meeting. Like David mentioned earlier, if you have any follow-up questions that, that may come up after this meeting, please feel free to email either myself or directly to our auditor. They're more than happy to answer any questions.
Yeah, and thanks Dave and Gabe also.
Yes.
Absolutely.
Great job. It's great working with you guys.
Thank you.
All right, thank you. Thank you, everybody.
See you
All
guys.
right.
Thank you, everyone. Take care. Bye now.
All right,
Bye-bye.
bye.